Welcome to the deep dive. Today we're going to be looking at the world of high finance, exploring the top 10 financial companies in the world by market cap in 2025.
Wow.
Yeah. So you're probably thinking, great, another list of big names and even bigger numbers.
Right.
But trust me, there's more to it than meets the eye. These companies aren't just numbers on a balance sheet. They're powerful players shaping the global economy.
What's fascinating here is that each company's journey, their ups and downs in market value, it tells a story.
Yeah.
A story about the forces shaping the financial world.
hmm
Technological innovation, regulatory shifts, global events. We'll see how some companies have weathered storms,
Yeah.
others have completely reinvented themselves, and some have stumbled offering valuable lessons along the way.
Okay, so let's set the stage.
Yep.
As of March 15th, 2025, our top contenders are JPMorgan Chase, leading the pack at a whopping $649 billion,
Wow.
followed closely by Visa at $640 billion and MasterCard at $481 billion. Then we have Bank of America at $310 billion, Wells Fargo at $232 billion, ICBC at $314 billion, China Construction Bank at $222 billion, Agricultural Bank of China at $244 billion, HSBC at $202 billion, and American Express rounding out the top 10 at $186 billion.
It's interesting to see payment processing giants like Visa and MasterCard holding their own against these traditional banking behemoths, wouldn't you say? This shift reflects a massive change in the financial landscape driven by the rise of digital payments and e-commerce, which we'll explore further.
Absolutely. It's incredible how these companies have adapted to the digital age. Speaking of adaptation, let's start with the current champion, JPMorgan Chase. They weren't always at the top, were they?
Not at all. JPMorgan Chase's story is a testament to resilience. Remember the 2008 financial crisis?
Oh, yeah.
Their market cap plummeted to a mere $117 billion. They were hit hard, just like everyone else.
That must have been a truly challenging time. How did they manage to recover and ultimately climb to the top spot?
Well, they were among the first to truly embrace digital banking. But they didn't just dip their toes in, they went all in,
Right.
investing heavily in key acquisitions.
Wow.
In 2017, they acquired Wepo, a digital payments platform catering to small businesses.
Okay.
This move was a game changer, allowing them to tap into a rapidly growing market segment.
So it was a combination of strategic acquisitions and a forward-thinking approach to digital banking that paved the way for their comeback.
Precisely. By 2021, they'd bounced back to $466 billion, and now in 2025, they're sitting pretty at the top. It's a testament to their ability to adapt and make bold moves in a rapidly changing landscape.
That's an inspiring story of resilience and strategic decision-making. Now, let's move on to two companies whose journeys are closely intertwined. Visa and MasterCard. Both have witnessed incredible growth, haven't they?
Absolutely. These two companies are prime examples of riding the wave of digital payments. Visa's journey is particularly impressive. Back in 2008, when they went public, their market cap was a modest $44 billion.
Hard to believe considering where they are now. What fueled their exponential growth?
Well, the rise of e-commerce played a significant role. Think about it every time you make an online purchase. Chances are you're using either Visa or MasterCard.
Right.
As online shopping became increasingly popular, so did their market value. By 2020, Visa's market cap exploded to $482 billion.
That's astronomical. But I recall reading that even they weren't immune to the economic headwinds of recent years.
That's right. In 2022, they experienced a dip, dropping to $439 billion.
Oh, wow.
This was partly due to inflation, which affected consumer spending, and in turn, their transaction volumes.
Could you elaborate on how inflation impacts companies like Visa? I imagine it's a bit more complex than simply people spending less.
You're right. It's not just about reduced spending. Inflation erodes the purchasing power of money. So while people might be making more transactions, the value of those transactions might not be increasing at the same rate.
Yep.
This can impact a company's revenue growth and consequently its market valuation.
That's a very insightful explanation. So despite these challenges, Visa has managed to rebound remarkably, reaching $640 billion in 2025. Now, what about MasterCard? Their story seems quite similar.
It is. MasterCard's trajectory closely mirrors Visa's. They began their public journey in 2006 with a market cap of $13 billion
Wow.
and witnessed a meteoric rise to $355 billion in 2020. They also felt the pinch of inflation in 2022 with their market cap dropping to $334 billion.
It's fascinating how their growth patterns are so closely aligned. Are there any key differences in their strategies or approaches that you've observed?
Well, while both companies have benefited immensely from the shift towards digital payments, They've also pursued different strategies to maintain their competitive edge. Visa, for instance, has been focusing on expanding its global reach, particularly in emerging markets.
That makes sense. Tapping into new markets with high growth potential is a smart move. What about MasterCard? What's their approach?
MasterCard has been focusing on partnerships and acquisitions to broaden its service offerings. They've been particularly active in the fintech space, acquiring companies that specialize in areas like data analytics, fraud prevention, and cybersecurity.
So they're bolstering their capabilities and diversifying their portfolio. It's like a constant race to stay ahead of the innovation curve.
Exactly. This competition between Visa and MasterCard isn't just about market share. It's about constantly pushing the boundaries of what's possible in the world of payments. It's a dynamic duo that's shaping the future of finance right before our eyes.
Their story is a testament to the power of innovation and how healthy competition can benefit an entire industry. Now let's shift gears and talk about a company that's had a much more turbulent journey, Bank of America. Their story is a classic example of highs, lows, and ultimately resilience, isn't it?
It is indeed. Bank of America's journey has been quite a roller coaster ride. In 1998, they were riding high with a market cap of $103 billion. But then the financial crisis of 2008 hit them hard.
What were some of the key factors that led to their decline during that period?
Well, a mountain of bad loans, primarily in the subprime mortgage market, played a significant role. They also made a series of acquisitions that in hindsight proved to be ill-timed and costly.
Oh,
By 2011, their market cap had crashed to a dismal $56 billion.
that's a staggering drop. It's a stark reminder of how quickly fortunes can change in the financial world. What steps did they take to recover from such a significant setback?
They embarked on a major restructuring program,
Okay,
cutting costs, shedding non-core assets, and strengthening their risk management practices.
got it.
Crucially, they also focused on rebuilding trust with their customers and regulators.
Trust is essential, especially after a major crisis. How did they go about rebuilding that trust?
They took a multi-pronged approach. They increased transparency in their operations, simplified their product offerings, and invested heavily in customer service.
Makes sense.
They also made a concerted effort to work with regulators to address concerns and ensure compliance.
So it was a combination of operational restructuring, strategic divestments, and a renewed focus on customer relationships that paved the way for their recovery.
Precisely. By 2021, they were back in the game with a market cap of $359 billion. They'd weathered the storm and emerged as a stronger, more resilient institution.
That's quite a comeback story, but their journey hasn't been entirely smooth sailing since then, has it?
You're right. In 2022, their market cap dipped again to $265 billion.
Really?
This time, it was primarily due to the rising interest rate environment, which put pressure on their net interest margins.
Could you explain how rising interest rates impact a bank's profitability?
Of course, banks make money by lending out money at a higher interest rate than they pay on deposits. When interest rates rise, the cost of their funding goes up. But they can't always pass on those higher costs to borrowers immediately.
Right.
This squeezes their profit margins, which can impact their stock price and consequently their market cap.
That's a very clear explanation. Thank you. So despite this recent dip, Bank of America has managed to stabilize at $310 billion in 2025. It seems they've learned some valuable lessons from their past experiences.
Absolutely. Their journey highlights the importance of adaptability, prudent risk management, and a customer-centric approach. It also underscores the cyclical nature of the banking industry and how even giants can stumble, but it's how they respond to adversity that defines them.
Bank of America's story is a powerful reminder that even in the face of significant challenges, resilience and strategic decision-making can pave the way for a remarkable comeback. Now let's move on to a company whose journey underscores the importance of trust and reputation, Wells Fargo.
Wells Fargo presents a fascinating case study.
Okay.
They were flying high in 2014, reaching a market cap of $283 billion. But then the infamous fake account scandal hit.
That was a major blow to their reputation. Could you remind our listeners about the details of that scandal?
Certainly. In 2016, it came to light that Wells Fargo employees had been opening millions of unauthorized bank accounts and credit cards in customers' names without their knowledge or consent.
Wow.
This was done to meet aggressive sales targets and boost the bank's profits.
Oh.
The scandal had far-reaching consequences.
It certainly did. It eroded public trust, led to hefty fines and regulatory scrutiny, and ultimately had a significant impact on their market value, didn't it?
Absolutely. Their market cap plummeted to $124 billion in 2020.
Oh my God.
Stark illustration of how unethical practices can have devastating consequences. It became a textbook case of how a company's reputation, once tarnished, can take years to repair.
It seems like a classic example of prioritizing short-term gains over long-term sustainability. What steps did Wells Fargo take to address this crisis and rebuild their reputation?
They replaced their CEO, overhauled their sales practices, and implemented stricter controls to prevent future misconduct.
Okay.
They also launched a massive marketing campaign to apologize to customers and regain their trust.
Those sound like necessary steps, but were they enough to restore public confidence? Did their efforts translate into a recovery in their market value?
It's been a slow and steady climb back.
Okay.
By 2021, they had managed to recover to $186 billion, and in 2025, they stand at $232 billion.
Okay.
While they haven't fully regained their pre-scandal market cap, their progress demonstrates that rebuilding trust is possible, but it takes time, consistent effort, and a genuine commitment to change.
Wells Fargo's story serves as a powerful reminder that in the world of finance, trust is paramount. Now get ready for a trip across the globe because our next three companies take us to China, where we'll explore the unique dynamics of the Chinese banking giants, ICBC, China Construction Bank, and Agricultural Bank of China.
What's particularly interesting about these companies is how their performance is intricately linked to China's economic policies and its global influence. It's like looking at a microcosm of China's economic journey through the lens of these banking behemoths.
That's a compelling way to frame it. Let's start with ICBC, the Industrial and Commercial Bank of China. They've had quite a journey, haven't they?
They have indeed. ICBC peaked at a staggering $472 billion in 2017, fueled by China's remarkable state-backed growth.
Wow.
They were riding high, benefiting from China's massive investments in infrastructure and its growing role in global trade.
It sounds like they were in the perfect position to capitalize on China's economic boom, but then came the trade wars and a global economic slowdown, didn't they? How did those events impact ICBC's trajectory?
They were not immune to the global headwinds. By 2020, their market cap had dropped to $262 billion.
Ow.
A significant decline, but still a testament to their relative resilience. The trade wars initiated by the U.S. created uncertainty in the global markets, impacting China's export-oriented economy.
So external factors beyond their control played a significant role in their market cap decline. How have they navigated these challenges and what's their current standing in 2025?
They've adapted by focusing on domestic growth opportunities, leveraging China's vast consumer market, and its continued investments in infrastructure projects.
Okay.
This strategic shift, coupled with their strong government backing, has helped them rebound to $314 billion in 2025.
It's fascinating how their fortunes are so closely tied to China's economic policies and its evolving role on the global stage. Now let's turn our attention to China Construction Bank. They seem to have had a more stable journey compared to ICDC, haven't they?
They have. China Construction Bank's focus on infrastructure financing and its relatively conservative lending practices have contributed to a more stable growth trajectory.
Okay.
They reached $232 billion in 2017, but like ICBC, experienced a dip in 2022, dropping to $157 billion.
What were the primary drivers of their market cap decline in 2022? Was it also related to the trade wars and global economic slowdown?
Well, while those factors played a role, the primary driver was China's decision to tighten its financial regulations, particularly in the real estate sector. This move was intended to cool down the overheated property market, but it also impacted lending activity for banks like China Construction Bank.
So internal regulatory changes within China had a more significant impact on their performance than external global factors in this instance.
Precisely. However, they've since recovered to $222 billion in 2025, benefiting from the stabilization of the Chinese real estate market and continued government support for infrastructure projects.
Their story highlights how domestic policies and regulatory shifts can have a profound impact on a company's performance, even within a rapidly growing economy like China's. Now let's delve into the unique story of Agricultural Bank of China. They seem to have carved a niche for themselves, haven't they?
They have indeed.
Yeah.
Agricultural Bank of China has distinguished itself by focusing on rural lending and agribusiness, catering to a vast and underserved market in China.
That's a smart strategy. Tapping into a niche market can offer a competitive advantage. How has their performance been in recent years?
They soared to $191 billion in 2014, riding the wave of rural lending in China. However, like the other Chinese banks, they experienced a dip in 2022, dropping to 142 billion, as rural lending slowed due to economic headwinds and concerns about rising bad debts in the agricultural sector.
That's understandable. Economic downturns often hit rural communities harder. How have they responded to these challenges? Have they managed to recover?
They've demonstrated remarkable adaptability.
Okay.
They've pivoted towards digital banking, making it easier for farmers and rural businesses to access financial services.
Got it.
They've also increased their focus on agribusiness loans, supporting the modernization and growth of China's agricultural sector.
So they're embracing technology and diversifying their loan portfolio. It sounds like a winning strategy.
It certainly seems to be paying off. They've rebounded to 244 billion in 2025, demonstrating their resilience and their ability to evolve with changing market dynamics.
It's remarkable how these Chinese banks, despite facing unique challenges and regulatory hurdles, have managed to maintain their positions as global financial giants.
Their stories offer a glimpse into the complexities of the Chinese financial system, its close ties to government policies, and its increasing influence on the global stage. They are forces to be reckoned with. Their performance, intricately linked to the rise of China as an economic superpower.
These insights into the Chinese banking giants have been incredibly enlightening. We've seen how government policies, regulatory shifts, and strategic decision-making have shaped their journeys. But we're not done yet. We still have HSBC and American Express to explore, both with their own unique stories to tell. Join us in part 2 of our deep dive, where we'll unravel their journeys and gain further insights into the forces shaping the global financial landscape.
As we've been unpacking these individual company stories, haven't you noticed some recurring themes? Underlying currents that are shaping the entire financial landscape.
You're right. The rise of digital payments has been a common thread. We saw it with Visa and MasterCard, of course, but even traditional institutions like JPMorgan Chase and Bank of America have had to adapt.
Exactly. It's not just about convenience for the consumer.
Huh.
Every transaction generates data,
Right.
and that data is incredibly valuable. These companies can use it to understand spending habits, personalize services, even develop entirely new financial products.
Data is the new gold, right? But it's not just technology driving change. We also saw how global events and economic policies can make or break these financial giants. The Chinese banks are a prime example.
Absolutely. Their fortunes are intricately tied to China's economic policies and global influence. And let's not forget the regulatory landscape. Remember what happened with China Construction Bank when China tightened its financial regulations.
Right. Their market cap took a hit when China cracked down on the real estate sector. And then there's Wells Fargo. Talk about a case study in the importance of ethical behavior and regulatory compliance.
Couldn't agree more. Those scandals really underscored that long-term success in finance isn't just about numbers. It's about trust, reputation, and navigating a complex web of regulations.
It's a balancing act for sure. But you know what else has been on my mind? Sustainability. I feel like investors are increasingly considering ESG factors, environmental, social, and governance when making decisions.
You're absolutely right. Companies that aren't taking steps to address climate change, promote diversity, and operate ethically will find themselves falling behind. It's not just about profits anymore. It's about purpose.
Okay, so we've got the rise of digital payments, the impact of global events, and the growing importance of sustainability. What else is on your radar? Any other trends you're watching closely?
The one that really fascinates me is the convergence of finance and technology.
Okay.
The lines are blurring between traditional institutions and tech companies. Think about Apple and Google. They're already offering payment services and dipping their toes into other financial products.
So you're saying my phone could eventually replace my bank?
It's not as far-fetched as it sounds. We're already seeing a rise in embedded finance. Imagine ordering a ride-sharing service and getting offered micro-insurance for your trip, all within the same app.
Yeah.
Financial services are becoming integrated into everyday platforms.
Wow, that's pretty mind-blowing. It feels like we're on the verge of a major transformation in how we interact with money.
We are. And it's not just about big tech. We're also seeing a surge in fintech startups that are challenging the status quo and offering new solutions in lending, investing, even financial literacy. They're agile, innovative, and unburdened by legacy systems.
It's exciting, but also a little bit intimidating. How are traditional financial institutions responding to all this disruption?
Well, some are embracing it head-on, partnering with fintech startups or developing their own innovative solutions. Others are taking a more cautious wait-and-see approach. It'll be interesting to see how this plays out.
Survival of the fittest, right? Only the most adaptable will thrive in this rapidly changing environment.
Exactly. And that's what makes this deep dive so valuable. By understanding the forces shaping the financial landscape, we can anticipate the future and make more informed decisions, not just as investors, but as consumers and citizens.
Okay, so we've covered a lot of ground here. Digital payments, global events, sustainability, the convergence of finance and technology, and the rise of fintech. What's the key takeaway? What does it all mean?
I think the key takeaway is this. The financial world is in a constant state of flux. Change is the only constant.
Hmm.
The companies that can adapt, embrace innovation, and navigate this complex interplay of global forces, regulations, and consumer expectations, those are the ones that will thrive.
Right.
The future of finance is being shaped right before our eyes.
And speaking of companies navigating a complex global landscape, let's get back to our list. We still have HSBC and American Express to explore. HSBC in particular has had to make some tough decisions in recent years, haven't they?
They have. HSBC's story really showcases both the opportunities and challenges of operating on a truly global scale. They've been around for over 150 years with a presence in over 60 countries.
Wow.
But recent geopolitical events have forced them to rethink their strategy.
You're talking about Brexit and the rising tensions between the West and China, right?
Exactly. Those events created a lot of uncertainty for HSBC. They had to figure out where to focus their resources and how to manage their global operations in a rapidly changing geopolitical environment.
So how did they respond? Did they retreat from the global stage?
Not at all. They made a strategic decision to double down on their presence in Asia, particularly in wealth management and sustainable finance. They're essentially betting on Asia's growing middle class and the increasing demand for sustainable investments.
It's a bold move for sure. It sounds like they're embracing the shifting tides of the global economy.
They are, and their performance in 2025 suggests the strategy might be paying off. They managed to recover from their 2020 lows and are back on track for growth.
HSBC's story is a great example of how agility and adaptability are essential for success in today's globalized world. Now let's talk about American Express. They've been around forever, but they always seem to stay relevant. What's their secret?
American Express is a masterclass in brand loyalty and premium service. They've weathered numerous economic storms, including the 2008 credit crunch, and always come out on top.
Yeah.
They've positioned themselves as a premium brand that caters to a discerning clientele.
Right.
And they've been very clever in partnering with businesses to offer exclusive rewards and perks to their cardholders.
I've always admired their marketing campaigns. They make you feel like having an American Express card is a symbol of success and exclusivity.
Exactly. They understand the power of aspiration and exclusivity, but it's not just about the brand.
Right?
They've also been very innovative in developing new products and services, particularly in the digital space.
Right. They were one of the first credit card companies to embrace mobile payments and digital wallets, and they've continued to invest heavily in those technologies.
Absolutely. They're not resting on their laurels.
Yeah.
They're constantly evolving to meet the changing needs of their customers. They've even expanded into areas like small business lending and travel services, further diversifying their revenue streams.
So they're a legacy brand with a startup mentality.
Uh-huh.
That's a potent combination.
It is. American Express is a great example of a company that's managed to stay relevant and successful by combining a strong brand with a commitment to innovation and customer service.
Well, there you have it. Our exploration of HSBC and American Express brings us to the end of part 2 of our deep dive into the top 10 financial giants of 2025. We've covered a lot of ground, but we've only just scratched the surface. Join us in part 3, where we'll wrap up with key takeaways and explore the future of finance. What trends and disruptions might be just around the corner? What will it take for these companies to stay ahead of the curve? And what does it all mean for you, the listener? We'll delve into all of that and more in our final installment.
Welcome back to the Deep Dive. We've journeyed to the stories of 9 financial giants, uncovering their strategies, their challenges, and the remarkable ability to adapt in a constantly evolving world. It's been fascinating to see how these companies, each with its unique strengths and weaknesses, have navigated the forces shaping the global financial landscape.
We've explored everything from the meteoric rise of digital payments to the delicate balancing act of maintaining trust and navigating regulatory hurdles. We've seen how geopolitical events, economic policies, and even social values can impact a company's trajectory.
And let's not forget the incredible pace of technological innovation and the rise of fintech, which are disrupting traditional business models and creating both opportunities and threats for these established players.
It's a lot to process, isn't it? As we wrap up our deep dive, I'm curious, what are your key takeaways from these stories? What stands out to you the most?
Well, for me, it's the remarkable resilience of the financial sector.
Okay.
Despite facing unprecedented challenges,
Yeah.
from global pandemics to trade wars, from regulatory crackdowns to technological disruptions, these companies have adapted, innovated, and ultimately thrived.
Yeah, it's a testament to their ability to think long-term, to anticipate change, and to make bold decisions when necessary. They've had to embrace digital transformation, prioritize customer centricity, and even redefine their core values in some cases.
Precisely.
Yeah.
And they've had to do all of this while operating under intense scrutiny from regulators, investors, and the public.
Right.
The financial world is a high-stakes game, and these companies have proven they can play it well.
Their stories offer valuable lessons not just for those in the financial industry, but for anyone navigating a complex and rapidly changing environment. But what about the future? What trends and disruptions are on the horizon? What will it take for these companies to stay ahead of the curve?
That's the million-dollar question, isn't it? The only certainty is that change will continue to be the only constant. We're already seeing the emergence of artificial intelligence, blockchain technology, and the metaverse, each with the potential to fundamentally reshape the financial landscape.
Yeah, it's exciting and a little bit daunting at the same time. What advice would you give to these companies as they navigate these uncharted waters?
I'd say embrace experimentation.
Okay.
Don't be afraid to fail fast and learn from your mistakes. Partner with innovative startups, invest in emerging technologies, and be willing to challenge your own assumptions.
Yeah, those are wise words. It's about embracing a growth mindset, a willingness to learn and adapt continuously. But it's not just about technology, is it?
Absolutely not. The companies that will truly thrive in the future are those that understand the human element of finance.
Right.
They need to build trust, prioritize transparency, and focus on creating value not just for shareholders, but for all stakeholders.
And it's about purpose-driven leadership,
Yeah.
about using their power and influence to make a positive impact on the world. It's about recognizing that finance is ultimately about people, their needs, their aspirations, their dreams.
Beautifully said. It's about building a financial system that is fair, inclusive, and empowers everyone to achieve financial well-being.
Well, I think we've reached the end of our deep dive.
Yeah.
We've explored the stories of 10 financial giants, uncovered the forces shaping the industry, and glimpsed into the exciting, albeit uncertain future of finance.
It's been a rewarding journey, wouldn't
Yeah.
you say?
Absolutely.
Yeah.
But the learning doesn't stop here. We've only just scratched the surface. I encourage all of you to continue exploring these topics, to stay curious, and to never stop asking questions.
Remember, the financial world is constantly evolving. By staying informed, engaging in critical thinking, and embracing a lifelong learning mindset, you can navigate this complex landscape and make empowered financial decisions for yourself and your future.
Thank you for joining us on this deep dive. We hope you found it insightful, engaging, and perhaps even a little bit inspiring. Until next time, keep exploring, keep learning, and keep diving deep.